afternoon, everyone, and welcome to Stock Market Today. It's Alyssa Corum here with Ken Shreve, and it's the day that we've been bracing for. We're going to break down the heavy losses across the major indexes today and three key moves that we saw today from a couple of stocks we've had on our radar. Ken, give us a little preview.
Yeah, definitely. We'll take a look at three names today. Nvidia, the top performer in the semiconductor sector, under a lot of pressure today. Also going to take a look at a sell signal for Cloudflare, and also a bright spot Thursday from retailer Five Below, which gapped up on strong earnings.
That's right. But first, our analysis of the major indexes. The tech-heavy Nasdaq closing down about 5% today. So huge losses, slightly off of session lows there at the end, but still down very sharply for the day. The Dow down 2.8%, the S&P 500 down about 3.5%. So Ken, yesterday we got a little head fake there. We thought maybe yesterday would have been the day that started the pullback to the 21-day line. Of course, we didn't see it going quite as far down as it ended up going today. But again, this is a day that we've been bracing for and using history as our guide, not to predict, but to give us maybe a little heads up for what was to come today.
Yeah, I mean, this was an unequivocal day of distribution, not only in the Nasdaq but the S&P 500. And yeah, the big picture column and IBD Live, we've been talking about a market that has been really showing a lot of yellow flags. Earlier this week, we had a very bullish reading, actually, from the Investors Intelligence survey of newsletter writers. When the bulls get excessive, that has come ahead of market tops in the past. So you've got a lot of bullishness out there among newsletter writers. We've been talking about the Nasdaq near the top of an upper channel line, or breaking above an upper channel line, and also waning breadth on the Nasdaq. So all the pieces were in place for a pullback, but the stock market can be counterintuitive, and it can keep going higher when it doesn't seem like it should be going higher. But we finally got some pretty stiff selling today.
That's right. And, I think where we are now is going to really be a key test, this 21-day line, the whole way up in this rally. That's kind of been the key bumper or guardrail that we've seen a lot of rebounds to the upside, some nice reversals, rebounds off the key levels for stock. But this could be a little different. Only time will tell.
It could be a little different, and we'll have to see. I was talking to my colleague David Chung, and he said, today was kind of reminiscent of the price action that we saw on the Nasdaq on June 11th, earlier, when it went down to a low of 94.03. You can see that big down day for the Nasdaq. There you go, right there, when it came down to its 21-day moving average, and then it was up for 8 straight sessions after that before another pullback. Now, I don't think we're thinking we're going to see 8 straight up days after today's sharp pullback. Like you said, things are a little different. There's a lot of extended stocks out there. So, market would benefit from a little pullback here, a little consolidation. But today was pretty reminiscent of June 11th. Big sharp gap down and visit to the 21-day moving average.
Yeah, that's a very good point. And so, yeah, we're keeping a very close eye on that 21-day line. And now just a quick look over at the Qs, which tracks the NASDAQ 100, the QQQ ETF. So visually a little similar here, of course, to the NASDAQ, also pulling back to the 21-day line. And Ken, I guess we could look at an intraday chart here to just see how we gap down in the morning. Looked like we may have tried to find a bottom, but very quickly undercut that level and really just continued lower throughout the day.
Yeah, and very, very heavy volume in the Qs today. If we go back to the daily chart real quick and see that volume was the heaviest in the Qs today since the index broke out in April. So when a leading stock does that, falls in the highest volume, that's a sell signal. So we're still going to see how the Qs behave around the 21-day moving average. It's possible it could find support here, but I think all of us here at IBD are just kind of hoping the market can kind of pause and pull back, and maybe be the pause that refreshes.
Yeah, but this is a great reminder of why you always want to stay in step with the market. We're doing that here on this show every day and in detail each morning on IBD Live. So these kinds of things, while they hurt, don't necessarily come as a surprise, which this definitely did not to us.
No, exactly. And in recent weeks, in the big picture, we've been talking about trimming, at least trimming, if not taking profits outright. I know several people around here are letting winners continue to work. Others have been, scaling back and lowering exposure. So
Yeah.
for many today, didn't hurt as much as it did other people because we've been scaling back and taking some partial gains and winners. But we'll see where it plays out. And right now, it's all about the 21-day line for both the Nasdaq and the Qs.
Yeah, and speaking of letting winners work, let's walk the audience through how they should handle an A plus stock like Nvidia, which dropped over 9% today, heavy volume, closing below that 10-day line for the first time in a while. But this run has just been probably one of the standouts of this whole rally. But the stock, even though with the sharp decline today, still holding well above its 21-day line. Ken, how do you treat this one?
Well, we didn't do anything with Nvidia today for leaderboard. This has been a big winner for us. We added it back on April 14th when the Nasdaq initially uh, gave a follow through day and confirmed a new market uptrend. So we've got a nice gain here. However, we may decide to scale back on this thing. We're really going to watch how it behaves around the 500 level. That's where the
Yeah.
21-day moving average is. So a decisive break of the 21-day line. We'll might scale back the position a little bit, and then a break of the 21-day line could bring a visit to the 50-day moving average, which for a really top stock like Nvidia should prove to be a big support level. So, like the indexes right now, we'll see if Nvidia makes a test of the 21-day moving average, and hopefully it finds support. If not, we may get more defensive with the stock.
All right, sounds like a plan. And next on our list, we're taking a look at Cloudflare, which did not have a good day today. It fell over 7%, heavy turnover. But the difference here with this one is that it did close below, drop below that 50-day line, and it's low over here at 3604, dipped below that level intraday as well. And this comes after a little bit of wild action earlier in August. But what's the thinking here when you get that decisive break of the 50-day or the 10-week?
Yeah, so the thinking here is that this was a decisive sell signal, and we added Cloudflare to leaderboard when it broke out over its recent high of 30.78, and that was several weeks ago. There you go. That was when we added it to leaderboard. So the break of the 50-day line today in very heavy volume, and it's now about 5% below its 10-week moving average on the weekly chart. So we just took the opportunity here, recognized it as a sell signal, and we took the opportunity to lock in a gain that we had in the stock, and it was a very small holding on leaderboard. But this is just a good lesson. If you have a profit in a stock and you see a decisive
Mhm.
break of the 10-week line, that's a pretty good sell signal, and play defense, lock in profits, and get out of the market's way.
Yeah, that's right. I think it's also a really great example of the importance of buying right, because we were able to get this on leaderboard back a little bit earlier in the rally, build that cushion that enables you to come out with a gain after a decline
That's
like
right.
today. So buying at the right time, super key. And last but not least, let's check out Five Below. Big gap up today for that discount retailer, up almost 9%, heavy volume with the move coming on earnings. We have, again, heavy volume here, the heaviest volume in quite a while. Does this signal perhaps some rotation that we're seeing in the market out of tech?
Yeah, it could be. I mean, I think the thing to keep in mind about Five Below is we've seen so many wonderfully strong retail stocks, and you include Lululemon in there. Five Below with a relative strength rating of 64, a composite rating of 83, and then you can see very lukewarm fundamentals at the bottom. So this is a stock that really doesn't really pass muster. We like to see more explosive growth in terms of fundamentals, but we have to give a shout out to Five Below just because it was
Mhm.
able to hold gains after gapping up in price, and you can see it closed in the upper half of its range, and really did a good job holding gains. And this is just a good solid breakout. Now, I'd caution people with the bearish performance for the stock market today, I wouldn't be running out and buying five below. But technically, it made a very bullish move today, and the fact that it held gains was also very positive.
Yeah, that's right. You don't want to be aggressively buying stocks when the market is coming under pressure like it did today. But Five Below, good one on your radar, because when we do see these earnings gaps, the strongest names we see hold those gains, trade tightly from there. So maybe Five Below will set up again. And when it does, maybe the market conditions are looking a little brighter.
Yeah, I think
At
if
least one
we
for
were
the
in the
radar.
early stages of a new market uptrend, and we were just starting to head higher, and a lot of breakouts were emerging. This is the type of chart that you want to target, but you also want to make sure the bullish fundamental story is
Mhm.
in place. And Five Below is a pretty well managed company, and but again, we're going to kind of wait for earnings and sales to turn around here before we consider a really strong name in retail. But good breakout for Five Below, and a rare bright spot today.
Yeah, and earnings are expected to turn around a bit next year. So we'll have to see in the
Yep.
post-COVID world how Five Below continues to do. But that's it for today, everyone. And just a reminder, IBD Live is the place where we are breaking down in detail in the first hour and a half of trade every morning. Our experts are walking through their take on the market, how they're hedging, what stocks are taking profits on, where they're adding, when appropriate. Today, not really a day that you want to be adding to positions, but we're breaking all of that down for you in detail over at investors.com/IBD Live. So we definitely hope everyone checks it out.
Yeah, there's going to be a lot of great discussion tomorrow morning, kind of making sense of the bearish action
Mhm.
that we saw today, and we'll see how the market opens tomorrow. Again, we're not necessarily expecting the June 11th downdraft and ensuing rally. We're not expecting that, but hey, we're going to watch the market and take signals from the market like we always do. So it'll be a lot of good discussion tomorrow morning, I'm sure.
Yeah, that it will. All right, everyone. Thanks for tuning in, and we'll see you right back here tomorrow.